Alrighty guys, you saw the title of the video. If I could only pick one stock to hold for an extended period of time, what would that stock be? We got to talk about that in this video. And if you all stick on throughout the video, we're going to pick one ETF. If I had to pick just one ETF to invest in and that's it, what would that be? And we'll talk about a real estate investment trust. If I could only pick one REIT, what would that be? So we got a lot to break down. If you all find value, hit the like button, subscribe, and make sure to get your free money from Moomoo, up to 5 free shares of stock, each up to $3,500, and you also have a chance at a free share of Twitter. Just use that link down below, and let's get right into the video. So check it out, guys. What would I pick if I could only pick one stock? So if you guys know me well, if you've been watching my channel for at least a couple of weeks, if you've been a long-term viewer, you probably know the answer, right? The answer to that question, if I could only pick one stock, is Google. But before we get into it, I want to kind of break down something to keep your mind on, right? Or something to really understand, because if you think about the title of this video and really holding on to just one stock for a very long time, we're talking not just 3 years, guys, not 5 years. We're talking a lifetime, right? If you look at one stock to hold for a lifetime, that's pretty, I don't want to say it's extraordinarily risky, but you gotta realize, guys, over 10 years, 20 years, a lot of things can change. So you kind of have to take this with a grain of salt, right? That's what I'm saying, because companies that are great today, they're at the top of the list or top market caps today. In 20 years, 30 years, they're most likely not going to be this big or as dominant as they are now. You know, that's what history tells us, at least. And I could be wrong. I could be wrong with these companies, Google as well. But as much as I love Google, I got to be honest, right? I got to be honest. So when we're talking about if I had to pick one stock, let's just say we're looking at this from a 10, 15-year horizon. You know, maybe 10, 12 years, 15 years, right? And honestly, I would hold Google longer than that, but just to preface the video, guys, we don't know if Google's even going to exist in 50 years, right? Let's be honest here. And a lot of companies, I'm sure a lot of the companies or some companies we know today will be here in 50 years, but a lot of them won't be, right? And we got to be honest with ourselves. So with that being out of the way, I would pick Google. You know, if I had to pick one stock to put all of my money in, all of my money, every dime that I'm worth, guys, if I had to put in one stock, it would be Google, right? Ticker symbol GOOG, or I guess technically the company is called Alphabet, right? And you guys know Google, the search engine. They make a lot of money on ads, Google ads. They do YouTube, or they own YouTube. They do Google Cloud. They have phones, hardware devices, right? Google is a beast. It's a company that has many companies within the company, right? Many segments that do multi-billions of dollars, many billions and billions, right? And we covered Google's earnings recently, and I broke down the segments. YouTube has not been growing, or at least based on the past quarter, year over year, if I could talk, guys, it wasn't growing as much as we would have liked. But still, YouTube is growing, and you got to ask yourselves, in 5 years, will YouTube be here? Absolutely, in my opinion. In 10 years, most likely, yes. And will it be a lot bigger? Yes, and heck yes, right? It will definitely be a lot bigger. It will definitely, in my opinion, still be here. And if you guys saw that video where I broke down Google's earnings, their cloud segment is growing like a freaking weed, guys. It was growing, I think, 40, 50% year over year. So here's some numbers on Google. Let's take a look here. I took my glasses off because this freaking light is beaming in my eye right now. We're going to get through the video, guys. Check it out. Google, in terms of market cap, and let me make sure you all can see this. I'll make my face a bit smaller. Google, in terms of market cap, is $1.5 trillion. So it's a pretty big company. It's one of the biggest in the world, guys. You know, top 3, top 5, whatever. I think top 3, right? Yeah, top 3. The PE ratio right now is a 20 to 21, and that's a trailing 12-month P ratio, right? And if I pull up EPS, you guys can see they've done about $110 in EPS over the past year. And pulling up their financials, let's just look at this. If you guys can see this is on quickfs.net. No, they do not sponsor my videos, but I do look at them for basic financial metrics to see how much revenue is growing, earnings, stuff like that. So look at Google, right? If you take a look here on the second row, you're going to notice revenue growth. Every year they're growing pretty much 20%, some years 15%. The lowest year has been 13%. We hit that in 2015, and then 2020 it grew about 13%. But look, 2021 it grew 41% revenues. And on average, if I had to do some napkin math here, or not even napkin math, mental math, on average in the past 10 years, and mind you, this is 10 years of data, Google has grown about, I would say, year-over-year revenue probably in the 20 to 25% range, 18 to 22% range, something like that. And I don't think that's going to slow down drastically. Now, in 10 years, are they still going to be growing 20, 30% a year? I don't think so. But 10%, I think so. 8 to 10%, I think so. So for me, guys, again, not to get too nitty-gritty into these numbers, that's not the purpose of this video. I'm just trying to outline a picture that Google's growing. The segments are still growing. YouTube is arguably the best streaming service. And if you think about it, it didn't really seem like a streaming service 2 years ago, but now it's at that point where I think YouTube's doing originals, YouTube Premium, YouTube TV, it's pretty much a streaming service. And I think it's going to be the biggest one. I think it has a real chance of beating out Netflix and, being the top dog. So I'm watching Google over these next couple of weeks. If it goes lower, I'm going to buy more. And again, if I had to just pick one stock, at the end of the day, it is going to be Google. Now, I could also make a case for Apple. I don't want to be that guy that's like, oh, he's just buying big tech, just another guy buying big tech. But for me, when I'm looking at these next 5-10 years, guys, the dominant companies that are making an impact in terms of, making the most money and just having the biggest moats, these companies have massive moats. These are the biggest companies, and at the end of the day, I don't see this changing in the next 5-10 years. So if I had to just pick one stock, it's going to be Google. It's going to be Apple. These companies, Apple, you can even make a bigger case for Apple over Google. Their ecosystem is unbelievable. I personally have a Mac, I have an iPad, the iPhone, the AirPods. I mean, if you're connected in this ecosystem, very hard to break, and you got to realize who's coming in right now and really just eating Apple's lunch. Sure, there's competitors, but over the next 5-10 years, do you really see Apple, the iPhone, going out of business in terms of not being the best smartphone out there that the majority of people want? I don't see that happening, and obviously the iPhone is the bread and butter for Apple. So if I had to pick a stock, it's going to be Google. It's going to be Apple. One of those two, and I'm probably just going to go with Google because that is my biggest holding right now in real life, after all, right? So let's talk about an ETF. If I had to pick one ETF, and I'm going to go boring on you guys here, but I'm going to go VOO. That's simple. And I also do own VOO, guys. This is the Vanguard S&P 500 ETF, and I am a very realistic person, right? When I talk to you guys here on YouTube, I don't bullshit. Hopefully we don't get flagged for that. I don't BS. I don't BS you guys. I'm not editing this video. Whatever. I don't BS you guys, right? I tell you, you should, and I'm not a financial advisor, but hey, I tell you, you should have a foundation built around ETFs, right? Index funds and individual stocks that are blue chip, stronger companies like Apple, Google, Disney, Microsoft. The list goes on. We're not going to talk about those, but I keep it real with you guys. I don't BS. I slipped. I might get caught by the YouTube algorithm on that, but whatever. But the truth is, I just keep it real, and VOO is the easiest investment you can make. Right now, its yield is 1.3%, so it pays a little bit of a dividend. Not too shabby, right? I don't know if you guys can see that. Let me see if I can see it, or you can see it. There we go. we can see an expense ratio of 0.03%, which is practically nothing. So you're not paying really anything for this to be managed. And if you're in a mutual fund, you're paying 1-2%. You're getting absolutely fleeced. So literally, guys, if you had to just put money into something every week and forget about it and look back in 20 years, I'm not kidding. You could just buy this. That's it. VOO. VOO. And unlike Google, remember what I said about the individual stocks? You don't know what's going to happen in 20, 30 years. So it's kind of risky to be like, oh, I'm going to hold just one stock for life. I mean, it doesn't always work that way. With ETFs, index funds, it does work that way. VOO is the S&P 500 largest publicly U.S. companies, right? Traded U.S. companies. And if some of these companies don't meet the guidelines, they get kicked out. The new companies come in. So if Google collapses in 10 years from now and it's not in that category or not in the doesn't meet the guidelines to be in the S&P 500, it could get kicked out. New company comes in, so you're always invested in the companies that are the 500 best. So you can literally hold this for life. I plan on holding VOO for life. I've been buying this for a while, still buying it, and I'll continue buying it, and I'm going to be holding it for a long time. So VOO is the ETF that I would own. And let me just pop back to ThinkOrSwim. Let me show you guys this performance. I don't want to be on here too long, but look at VOO. Over the past decade, if I pull up this chart, you're going to see if you just bought this in 2010, if you bought this in 2000, and you just kept contributing, look at what you would have done. I mean, this back in 2010 was $100 a share. Now it's $378. It was over $400. So you would have made 4 times your money, boom, just like that, in 10 years holding VOO. So at this point, guys, it's not a get-rich-quick scheme, of course, this one ETF for life, but it's a get-rich slow scheme. We're going to start that saying here on YouTube, get rich slow. So that's the ETF I would pick. You could also go VTI, which it's a little bit different. VTI holds all of the U.S. stocks. Remember, in the U.S. stock market, there's not just large caps. There's small caps, mid caps. So if you want exposure to the smaller companies, the more volatile small companies that could blow up, if you want mid cap, this is the one you would want. It has more stocks than the S&P 500, and it's more exposure to again, small and mid cap. And you can do VT, which is one that has the whole world in terms of literally all the stocks in the world. If you want U.S. exposure, small, mid cap, if you want large cap, boom, it's in VT. If you want international, it's in VT. So if you want everything lumped into one, boom, you can do that. Hold it forever. You'll be good. You'll be rich in retirement if you contribute at a young age, or even if you're 40, 50, guys, you can still contribute. But if you're consistent with it, 5, 10, 20 years, you're going to have a lot of money, right? So that's just the reality. And if I had to pick a REIT, I would probably go Realty Income. Honestly, that's probably the safest one. I forget its nickname, but I think it's like there's like a slogan. I forget the slogan. It's kind of corny, but it's what Realty Income goes by. And let me just pull up this website very quickly, guys, and show you Realty Income in terms of occupancy and who's who they lease to and so forth. So give me a second. I'll pop it up here. I'll make my face small. So listen, guys, this is not the sexiest one, but it has the history of being a good dividend paying REIT, right? At the end of the day, that's what I want. Currently, the dividend yields 4.5%, roughly a $39 billion market cap, and the price is $66 a share. And last I checked, here we go. Let's see this, 15.3% compounded. Just look at these stats here, guys. This is not BS. I mean, this is legit stuff. 15.3% compounded average annual total return since 1994 New York Stock Exchange listing. That's a very good return. Very, very, very good return. 621 months consecutive what am I saying here? 621 consecutive monthly dividends paid, which is ridiculous. Just do the math, guys. 612 divided by 621 rather. Let me do this math. Divided by 12. They have paid 51 years. Does that actually 51 months rather? No. 600. You guys know what I mean. I'm mixing myself up here. You guys know what I'm trying to say, right? 4.4% compound annualized dividends since, or rather growth, which, okay, that's not beating inflation right now, but in usual inflationary times, 2-3% inflation, if they're growing the dividend, annualized 4.4%, boom, nice. That's beating inflation. 98 consecutive quarterly increases. That is solid. They have about 11,200 properties under long-term net lease agreements. 50 states, Puerto Rico, UK, Spain, roughly 1,090 clients. I want to show you guys who these clients are. Asset management, let's see here. 98.6% portfolio occupancy. That is very good. Let's just look at the top 20 clients. So we're talking about companies like Walgreens, right? Think about Walgreens. You definitely have seen a Walgreens in your area. 7-Eleven, Dollar General, Dollar Tree, Family Dollar, FedEx, LA Fitness, Sainsbury's, I don't even know. I've never been on one of those. I don't even know what that is, to be honest with you. It might not be a thing here on the East Coast. BJ's Wholesale Club, CVS, Walmart. Obviously, we know Walmart, Sam's Club. They own a couple of those. AMC, and the list goes on, right? So you get the point. Very high occupancy rate, and the way they structure their agreements, right? Triple net lease. Very good. Look more into that, guys. We're not going to get into that in this video. And don't forget, 15.3%. Return compounded annually, which is great since 1994. So if I had to pick one REIT, which is unusual because I've never really met anybody that goes all in on one REIT. I mean, I've seen people that go all in on a stock, like if you want to own or put all your money in a stock, but I've never really seen anybody do that with their REIT. But if I had to, I'd just go the safe route and pick Realty Income. So that's it. I hope you guys enjoyed this video. If you did, make sure to smash the like button, subscribe. Let's get to 25,000 subscribers, and drop me a comment and let me know what you would hold for the long term. And don't forget to get your free money from Moomoo, up to 5 free shares of stock, each up to $3,500, and you could get up to 1 free share of Twitter. Use that link down below, deposit at least $100, and you get your money. And with that being said, I'll catch you guys in the next video. Thanks for watching. As always, peace out.